Hey everyone, welcome in to another daily editorial here on the KE Report. I'm chatting with Jordan Roy-Byrne, founder and editor of The Daily Gold. Now, Jordan, you and I are recording this pretty much right when the Fed is releasing its statement, and undoubtedly we will see some sort of volatility around this statement. But I'm not expecting a whole lot new coming out of the Fed. And I really do think that we need to look into the future with a level head and understand what the Fed is going to be doing in terms of potential QE or even winding down some of the QE, all depending on how the economy bounces back or if we all get back to some sort of semblance of daily life. A lot of question marks, though. But I know from talking to you, you hate paying attention to the Fed. You hate all the noise and volatility that comes around it. Please, Jordan, give us a little recap of why you ignore the Fed statement and what you think matters more to investors to pay attention to.
Well, Corey, I think that, as I always say, markets are a discounting mechanism. They look forward, they anticipate changes in trend or fundamentals. And the idea that news is going to set the trend or create a new trend or stop the current trend and reverse it, markets don't work that way. I mean, news events cannot be predicted in advance, and it just over the longer term, or once you get past a couple days of reaction to the news event, depending on what it is, it's just meaningless, in my opinion. What is the Fed going to tell us that is going to change everything that's going on? Are they going to say we're now going to do QE and we're going to give everybody $2,000 a month, or now we're going to hike rates aggressively? No, I mean they're not going to say anything that means anything really for the most part. So to me, it's just the following news, like the Fed, political news. It's just a bunch of nonsense. And what people really should do is they should, anytime they spend following the news, they should take that time and spend 100% of it following the companies that they invest in or want to invest in. And that's coming from a technical guy, by the way. So news events cannot be predicted. The reaction cannot be predicted. Focus on the fundamentals of your stocks and or the stocks that you have on your watch list or want to buy at some point. You're going to be much better off, much richer in the future by doing so.
Jordan, in all fairness, it does matter, though, what direction the Fed is going. And if they were to, say, massively cut rates or issue a massive QE program, that would have some impact on the markets. It's just the fact that we're not expecting it. And quite frankly, I think everybody is expecting some sort of funding package. So you can make the argument that that is already priced in by the markets.
Okay, but with that being said, the last point I want to make is that focus a lot more on trend and sentiment. So price action and positioning. And if we look at precious metals, for example, we know that they're trading around a low. So it's highly, highly unlikely that the Fed could say something or do something that's going to plunge precious metals much lower than they are right now. So that to me, I mean, we're setting up for a bottom, we're grinding out a bottom. And so that to me is more important than whatever they do or say. And it'll probably just be a non-event, really. I mean, it looks like we're selling off a little bit just looking at the miners. But we'll see. I mean, I that was just my last point on that is focus on how the market is set up. I mean, if the market is had a huge run and it's looking like it needs to correct or be toppy, then it's probably going to sell off based on the statement. If in the case of precious metals, it's trying to grind out a bottom here, well, maybe it'll continue to grind out that bottom and do a rebound at some point over the days and weeks ahead. So that was just my last point is focus on the setup of the market. And that will help you more than focusing on the news or the reaction to it.
So where do we stand when it comes to the gold market? Look, it's been correcting. It has had a little bounce, but quite frankly, it is still within this downtrend. I know a lot of people are saying, hey, tax loss selling season is pretty much over. We should get this bottom. Even you and I talked last week about how a couple stocks are signifying maybe some sort of a more solid bottom put in here. But the fact of the matter is, gold isn't screaming higher. We are still in this downtrend. So, what are some of the main cross currents that you're watching?
Well, I think the cross currents will. I'll mention those in a moment. I think those will come into play probably in the first quarter. But looking at the gold stocks have sold off, and 2 days ago they looked like they were heading for a double bottom. It's still possible that they could retest the low from November 24th. So I think that I would say we're bottoming. That describes the action that's going on in the sector. And the cross currents are really interesting. And those are, you have the stock market that's done really, really well and is really, really strongly outperformed precious metals. And at the same time, a lot of that has been on the back of a weak dollar. Now, the dollar coming into today was below 91. It has rock solid support at 88. So the dollar could fall a little bit more before it sets up for a rebound. So looking out a month or two, Corey, I think we have to think about the potential for a rebound in the dollar and also a correction in the stock market. Some of the sentiment numbers on the stock market are just really getting silly. So it's possible that we could have a rebound in the dollar at some point and a sell-off in the stock market. And how is that going to impact this rebound in precious metals? That should, I think it will take hold once we get past Christmas and into the new year. So and I don't have a answer for you, which makes it kind of exciting, because on the one hand, you would say, well, if the dollar rebounds from really strong support at 88, that'll be negative for everything. But at the same time, you could say, well, the gold and gold stocks, they haven't done that well recently, considering the really weak dollar. So perhaps, I mean, if you get a sustained correction in the stock market, a sustained rebound in the dollar, that would lead to potentially the need for, the Fed to be a lot easier, for the government to finally get a stimulus package done, or I don't know if by the time that happens, it's a second stimulus package. So those are just the things that I'm thinking about. I'm not, I don't want to predict one way or another, but I think where we are here right now, I will say, I think we're in a bottoming process for the stocks, and that at least into January, the path of least resistance should be higher.
So, Jordan, let's say we move into January right around the current price that we are at for gold. How quickly could we see a move, either higher or lower? Could it be very, very drastic, or is it going to be more of a grinding, higher or lower?
I think it's probably more likely to be a grind, and the reason I say that, and pulling up a chart of gold, because there was a significant amount of technical damage. Looking at the chart of gold, it spent a lot of time consolidating before it really broke down, and there's very stiff resistance in the mid 1900s, so we could say 1950, 1960, really stiff resistance there. If gold takes that out, it's going to retest the high. But below that, I could look at the chart and I also see there's stiff resistance around 1920. In the days ago, I think gold rallied up close to 1880 or so. So I'm just looking at this chart, and there's quite a bit of resistance to deal with during this rebound. So I think it's going to be more of a grind. I could say 1.5 steps forward, 1 step back. So that would be my guess.
Okay. And then in terms of the stocks, are you watching more of the majors, more of the juniors as a barometer as to what the future direction could be into next year?
Yeah, that's a good question. It's always important to watch the majors, but I'm looking at the gold silver ratio. That to me is really interesting. I'm looking at how silver stocks are performing because if they continue to hold up well and we see silver continue to hold its lows, and if silver can rally above 26, it can probably retest its high. So 26 is pretty significant resistance for silver. So those are the things I'm watching right now, more so than majors versus juniors and that sort of thing.
Okay, well, Jordan, we'll wrap it up here. Again, there wasn't a whole lot to talk about considering last time we chatted to this time, about a week later, gold price and even something like GDXJ still pretty much right at the same level. So, again, a lot of these push and pull factors that we'll probably need to wait until next year to get some more clarity. But again, I don't think just an easy, just say it's going to go skyrocketing higher right now because a lot is changing. Jordan, thanks for your time, buddy. I will post a link to your website, The Daily Gold. Have a great rest of your week.